wouldn't it be great if we could look to one all-encompassing metric for our Bitcoin investing? Well, we've created exactly that. Here is the official Bitcoin Everything Indicator. Today we're going to be looking at the official release of the Bitcoin Everything Indicator, and where better to start than the Bitcoin Everything Indicator chart we've just added to bitcoinmagazinepro.com. Now this is something we've talked about multiple times in the past, written articles about, shared it on social media. We've tried to create an all-encompassing metric that doesn't just look at one perspective, being on-chain or technical or derivative charts. We've tried to put everything we need into one metric just to really simplify our investing and analysis. Now, disclaimer, this doesn't include every single metric. We have over 150 charts on site, so we tried to narrow it down just to the most important few. So I think first we'll look at this, which is the Bitcoin Trajectory Catalysts, or BTCs for short. Now these are the most influential factors impacting the price appreciation or depreciation of Bitcoin. Now what we can see is, if I just hide myself maybe so it's a little bit easier to see, firstly, we have macroeconomic data. Now, this takes up obviously a pretty big portion of what we think influences the Bitcoin price action, mainly due to the global liquidity cycle we see and have seen the correlation with, and the Bitcoin price action over the past few years. Now, this obviously has a big major part in how Bitcoin's price moves. So this is the foundational pillar of Bitcoin's price appreciation or depreciation. And along with that, we have the BTC fundamentals. Here we're mainly looking at the halving and the strength of the miners and the Bitcoin network as a whole. Then we of course have on-chain data and technicals also making up a huge part of the factors that influence the Bitcoin price action. But checking all of these individually can be a pretty time-consuming process, and sometimes you may overweigh one element to compare to the other when, as we can see, of course these percentages are just rough guidelines, they're not exact figures. What we can see is we really need to take into account everything in one. So firstly, we have global M2, which is our macroeconomic factor. Like we said, the Bitcoin correlation to the global liquidity cycle is clear to see. Of course, the Bitcoin halving probably has some influence on the price action just due to the supply and demand economics of BTC, but especially now we're seeing such a small amount of change in the Bitcoin halving. Of course, it's always going to be a 50% cut, but the fact that the amount of BTC already in circulation is above 94% of all BTC that we'll ever see, the remaining halving events are going to have a lessened and dampened impact. But what doesn't have a lessened and dampened impact is the amount of fiat supply we see in the global economic system. And when we see an expansion in this, we usually see Bitcoin's price appreciate, which makes sense. The supply and demand economics aren't just influenced by the Bitcoin supply and demand. If we see an increased supply and decreased demand in fiat currencies like the US dollar, people look to other assets that can provide value and a return that aren't just depreciation due to inflation. So this is the foundational part of the everything indicator. And like we said, along from that, we have the BTC fundamentals in themselves. So here we have the Puel multiple, which is looking at miners and their profitability compared to their previous yearly average in USD denominated terms. And again, what we can clearly see here is when the miners are healthy, when the miners are making a lot of profit, that's usually pretty good indication, that Bitcoin's having a good time too, especially post-halving when we have this pretty typical halving drop-off in revenue, about a 6+ month period of choppy consolidation where Bitcoin kind of adjusts to the new inflationary rate, and we see miners at a little bit of a lessened profitability compared to the previous yearly average. And once we break above this value of 1, usually indicates we're entering the latter stages of the cycles. This is again another key component. Along with that, we have the Bitcoin MVRV score, probably the most popular metric we have on site. Now this is looking at the relationship between the underlying price or market cap of BTC and the realized cap, which is the average accumulation price or cost basis for all investors on the network. And what we can see very clearly, this clearly outlines good areas to accumulate BTC and good areas to distribute BTC. Now, on its own, you could look at something like this and say, well, why do I need an everything indicator when this has performed exceptionally well throughout all of Bitcoin's history? And what we need to acknowledge is just looking at one metric in isolation, while it may perform great going forward, and hopefully it does throughout not just this cycle, but in future cycles, is the market dynamics are changing. We may not get a metric, a value on this, as high as we previously have. In this cycle, maybe we see a slightly muted top and values of only 5 or 6, just due to the fact that obviously institutional inflows are changing the market dynamics. People may be holding BTC for longer and longer periods of time. Maybe we see less on-chain activity as people maybe don't sell their BTC but just use it as collateral for loans. So of course, this is an important element to have, but this is why we created the everything indicator. So we're not just weighting everything on a few on-chain metrics and missing the bigger picture. Alongside that, we have the spent output profit ratio, because what really drives price, not just in Bitcoin, but in everything, it's supply and demand, it's buying and selling. When we're seeing people sell BTC, especially for a massive amount of profit, that usually indicates that we're getting close to a market peak. And when people are selling for a massive loss, usually that indicates that we're getting towards a market bottom. And what we can see is, looking at the spent output profit ratio, again, when we see especially larger, got there in the end, BTC holders begin realizing profits or loss, this usually indicates what the market is doing and what price action is likely to do next. So another key component is the actual profit that is being realized on chain. Alongside that, the network utilization, looking at the active address sentiment indicator. This is looking at the 28-day percentage change in active addresses on the network, which is great because it's not looking at a fixed value oscillator, for example. If over the coming years we see less and less people using the Bitcoin network as a whole, this will adjust for that because it's just looking at a 28-day period. So what we can see is when we see deviations on this, when we see price massively increasing, which isn't necessarily supported by an increase in the amount of network users, then that usually indicates that we're maybe seeing a short-term peak in price action. And same for the downside. If Bitcoin's price is really decreasing heavily and we're not seeing a decrease in the amount of network users, we're seeing a discrepancy there, that usually indicates that the downside move can't be sustained infinitely more and we're about to see a potential bounce in the price action. So that's another key component. Again, a lot of these probably cross over where we see, for example, something like the active address sentiment indicator within on-chain and within technical factors. And we see something like the spent output profit ratio potentially crossing over between on-chain and Bitcoin fundamentals. But once we kind of get something covering all our bases, this is why we really want something like this to provide confluence across multiple perspectives. And finally, the Bitcoin Crosby ratio, which just like this looks a little bit crazy, but if we just zoom in over the previous couple cycles, what we can see is this is purely technical based. This is looking at the Bitcoin price action just on its own, not taking into account network utilization, on-chain, macroeconomic derivative, anything like that. This is just looking at Bitcoin's moves to the upside and the downside to really identify overheated, overextended conditions, and maybe when BTC is at a discount, maybe when it's a little bit oversold. So once we bundle all of those things together, we get the Bitcoin everything indicator. If we just scroll down, it has all of the information here if you want to read more into it. But does this actually work? Of course, it's great coming up with a metric that on paper looks great and looks like it's worked historically well, but can we actually use this? Can we rely on this going forward? Well, what we can do is go to the Bitcoin chart here, just on TradingView. And again, what I'm going to do is just hide myself so you can see the chart a little bit clearer. And then if I just add this on here, the Bitcoin, it's still called the total index strategy on here. I need to rename it. What we can see, if we just zoom out all the way back to 2011, when we first started getting signals on this metric, it has actually outperformed buy and hold BTC. Now, this is an incredibly simple implementation of this strategy. What it's doing is just buying 1% of your account capital every single time we're beneath this green zone, we're in the buy zone here, and it's selling 2% every time we're in this upper sell zone here. Now, the reason it's buying it slightly more than it is selling is because Bitcoin usually spends multiple months in incredibly oversold conditions. So we actually have more opportunities to buy BTC at lower prices, whereas BTC, when it begins to really accelerate to the upside and we have these blow-off tops, they're usually pretty short-lived. So we actually want to start scaling out a little bit more aggressively than we scale into our positions. What we can see going back to 2011, pretty much as much time as we have, compare it to the first BTC buy we had, which if we go all the way back here, would have been when BTC was at around $5 or $6, $5.82. So comparing the buy and hold performance of BTC since it was less than $6 to over $100,000 we've seen today, can we beat that buy and hold? That's a hell of a benchmark. But what we can see is, if I just put it back to this, we have actually outperformed buy and hold, which is unbelievable considering the returns. If I just look here, what this is looking at is starting with a portfolio balance of $100. And this is fees included and slippage as well. I just set the slippage to 1 and the fees to 0.06. What we can see is we've actually massively outperformed buy and hold. especially considering this is our realized profit and we still have an open profit and loss of multiple hundreds of percent. So you'd have turned your 100 initial starting dollars into multiple millions, which should obviously be great. So this isn't just something that you can look at and say, oh yeah, it looks great on paper. This is something that I'll maybe add in. This is actionable and works great just on its own, and we can prove that historically. And what we can see, just zooming in onto the current data we have here on site or in the TradingView iteration, is this is almost exactly at a value of around 50 on this chart. Now, that doesn't necessarily mean that we're 50% of the way through this cycle. Of course, if we reached a value of 100, then we may be 50% of the way through the cycle, but we really start getting overheated around values of around 75, 80-ish. So maybe we're not 50% of the way through, but we still have plenty of upside potential remaining for this cycle. So looking at the everything indicator, of course, this again maybe shouldn't be relied on just on its own, but it definitely should be something you take into consideration, considering this takes everything into consideration when doing your Bitcoin investing and analysis. Also, if you haven't already, please don't forget to like this video, subscribe to the channel and turn on notifications to ensure you're receiving all of our content as soon as it is released. And make sure to check out all the resources we've discussed today, as well as the many more that are all available on bitcoinmagazinepro.com, your #1 source for Bitcoin analysis. So just to summarize, the Bitcoin Everything Indicator attempts to combine metrics covering all market perspectives from on-chain and macro to fundamentals and technicals for an all-encompassing confluence indicator. And one thing I didn't mention previously, but to prevent any overfitting, because I'll be honest, there's multiple different iterations like this that exist, people that have tried to cover Bitcoin's market price action just from an all-encompassing all-inclusive metric, but I didn't want to overfit this. I didn't want to choose metrics that have always worked historically well. I tried to include ones that maybe historically haven't worked great, but it doesn't matter because others made up for the downfalls we had in that, etc. And these are all equally weighted. I didn't put the MVRVZ score at 80% of the influence on the everything indicator. Every single component is equally weighted to make sure there wasn't any overfitting or bias and to try and make it as robust and accurate going forward. And this approach, what we can see is preventing focusing on just one or two data points that a lot of people maybe get crowded up on. Of course, if the pi cycle top gives us a signal and the MVRV gives us a signal, that's great, but we can't rely on just one or two to give us a sell signal for this BTC or any other BTC cycles. So when we take a perspective from an all-encompassing metric like this that looks at every single factor that influences the Bitcoin price action, we can also see that historically this is outperformed buy and hold from when Bitcoin was just $5 or $6 with significantly less drawdown. I don't know if I've mentioned it previously, but this only had about a 20% drawdown while beating buy and hold. Whereas if you were to buy and hold, you'd have had to withstand 60, 70, 80%, 90% plus drawdowns throughout Bitcoin's entire history. And what we can also see is when looking at how far this metric is from a current peak, like we said, it doesn't necessarily mean that we're 50% of the way through this cycle, but it does show that we still have a significant upside potential remaining throughout the coming months and potentially years for BTC. If you like this video, then please visit bitcoinmagazinepro.com, where our analytics help you to cut through the noise to make informed, data-driven decisions about Bitcoin. With over 150 live charts, personalized indicator alerts, in-depth crypto industry reports, API access, and more, all for a fraction of the standard industry price. And let me know what your thoughts are on the Bitcoin Everything Indicator down in the comments below and on social media. Do you think this is something that you'll be adding to your arsenal of metrics, or do you think that it's maybe, I don't know, do you not like it? Whatever your thoughts are, let me know. I look forward to reading and replying to them. Thank you all very much for watching, and I'll see you in the next one.